You need to learn to be agnostic about your trading. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to be talking about a quote I read on Peter Brandt's Twitter feed a while ago, and that's traders deal in possibilities. They need to remain agnostic about the outcomes of the trades. If it works out, great. If it doesn't, move on to the next trade. As a retail trader, especially if you're trying to push size or get your trades up to a certain size, you're going to be dealing with increased levels of stress and anxiety, and you need to be in control of your mental state and focus on the process of trading and maintaining your edge. Now, I talk about mindset training all the time. I talk about going to my homepage, getting my 7-step daily routine. The point of that daily routine is to help you ritualize your process, ritualize your goal setting, accelerate your learning, but it's more about shifting your headspace to where you're thinking like a professional trader. Professional traders focus on managing risk. Every time I take a trade, it's about how much am I willing to lose. I'm assuming I'm going to be wrong on that trade. I want to make my maximum loss only a certain percentage size of my account, but I also look for asymmetrical risk-reward opportunities. So we're going to talk about a couple things. The first thing I want to talk about is the cycle that a lot of losing traders go through, and that's price and time. We often will wait for confirming indicators, we'll wait for things to line up and be just right. We'll take that trade and we'll enter out of that trade because we think this one's going to be a big trade. Often, perhaps, like I've done in the past, you'll take a trade, you'll take too much leverage, you'll get in right near a resistance level, maybe not necessarily on that time frame, but on some time frame, and then the selling occurs, you exit out of panic. When it comes back down to support, the market then again turns, and if you haven't gotten out of that trade yet, you exit out of fear. If you sold this trade and it was coming back against you, you would then exit out of fear because you don't want to take a loss or lose any of the profit that you potentially may have had. So instead of even getting profit, you don't want to get out, you want to get out at break even. So these are the types of things that, this is an example of where traders might look for range extensions, but more importantly, just in terms of your mindset, the thing that creates a lot of these losing type of behaviors with traders is the fear of missing out, FOMO. And we talked about this in lots of other videos. I'm sure you've heard of FOMO before, but you really need to have that's why I like just basic price action strategies, because it's based on when there's a breakout. I've talked about breakout trades before. One of the best things about breakout trading, I know a lot of traders don't like them, but when they're applied at certain times with certain types of setups, they have a couple of things that I really like. One is that I can identify one bar where I can place my maximum risk into the market, but I also can look for range extensions off of that breakout depending on the type of pattern that the market's broken out from. So again, I'm looking for patterns that are going to give me 3, 4, 5, maybe 10 to 1 return on that risk. So I'm willing to take that trade. I've hardened my mindset to be able to execute that trade based on a certain position size and percentage of capital, but I know that I'm looking at 4R, 5R, 6R in return on that trade. And this is where number 2 comes in. You want to be focusing on your trading like a business. Stop thinking about being right. Stop thinking about making money. Stop thinking about showing people what you know, and start thinking about managing your capital. Allocate a certain amount to every single trade, get the process down, make sure you've got a positive expectancy or an edge in the market, and just keep hitting those trades. But be a good loser. Trading business itself is about managing your capital. So you need to have these rules in place. How much are you willing to lose on the day, on the week, on the month, whatever that is, depending on the time frame you're trading, but focus on capital management. Number 3, keep learning. I talk about this every single day. The most important thing that I've ever done is every single day plug myself into learning from other traders. There's going to be something you can learn from somebody every single day. And it might just be a little nugget. It might come at a different time or at the right time when you're ready to hear it and apply it to your own trading style. So be learning something new every single day, whether it's from your own trades or from other traders. Mike Bellafiore is great at this. They have a daily meeting in their office. Different traders present their market setups. They build their playbook. They go back and review those trades at the end of the day. They videotape their trades. They monitor everything. And it's just like a professional athlete. They're constantly looking to sharpen their edge and hone their skills. Number 4, paper trade or use micro lots. So I talk about this in other videos. I'm not big on paper trading, but I am big on getting the process down and being able to replicate that trading in live time. And micro lots are great because you've got some skin in the game that can give you a scorecard of your trades. I say this all the time: if you can't manage a small amount of money, you can't manage a large amount of money. Start with micro lots until you've got a winning edge or a positive expectancy in the market, and you've proven to yourself that you can manage your emotions regardless of the size of capital, and you can follow your trading process flawlessly. Number 5, fail forward. I'm the king of this. Unfortunately, I believe in making mistakes and learning from them, and I think that most of the really successful traders constantly push their boundaries to get better. They're willing to risk capital. They're willing to make mistakes, but the purpose behind that is, like John Maxwell says, failing forward. If you push the envelope and you do it properly, you're going to make mistakes, but you are going to learn and you are going to get better. For me, I have a certain goal that I want to get to, and that's a short-term goal, but I have to keep pushing the envelope in order to challenge myself and to hone those skills and to get better each day as a trader. So hopefully you got some value out of today's video. Use these tips to sharpen your own skills. Every single day is a battle to get better. You go back into the market. Doesn't matter what you did yesterday, today's a new day. You got to keep focused on being at the best of your game and constant progress, traders. So stay focused, stay disciplined. Love to get your comments below and your feedback. Again, whatever you're struggling with, let's try and get better together, what your successes have been so far, and stay focused, stay disciplined, keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.